So if each of you could just take a couple of minutes to introduce yourself, your background, how many years you've been in this space, and your firm, and have you worked for different firms, what you've learned through that process?
Okay, I'm Philip Carew with PI Financial. I'm based out of Toronto. PI's headquartered here in Vancouver. I've got a background as a geologist, primarily working with Shore Gold, the big diamond play in Saskatchewan, taking that project from exploration to feasibility. We had exploration budgets in excess of $100 million a year at the time, which is kind of unheard of nowadays. But after that, pursued an MBA and have been doing the sell-side analyst gig here for about 6 years now. So I'm focusing on exploration and junior producers, whether they're based in Canada, US, and Mexico, but primarily, kind of mid-cap size companies.
Great.
Morning all. My name's Mick Carew. I'm with Haywood Securities. I guess my background, I'm a PhD geologist. I worked as a geologist, mostly in exploration, a little bit in production or mine geo, for about 10 years, mainly with BHP, Ivanhoe, and a couple of small cap juniors over that period of time. And then I just decided to come over to the sell-side analyst gig and did that about 4 years ago, or just under 4 years ago. So I've been with Haywood during that time. And my focus at Haywood is predominantly the early stage exploration to resource definition development stage companies. So that's my role, and yeah, that's it.
And did you enjoy working for Robert Friedland?
Yeah, I was in Mongolia for a couple of years, and definitely an experience. Yeah.
Because Rick was talking earlier about one of those great entrepreneurs that are always demanding. Go ahead.
Hi, my name's Chris Thompson. Work for Raymond James in Vancouver. I've been an analyst for about 12 years. I started my career in South Africa. That's why I speak with a funny accent, not quite Australian, but I am South African. I started with Haywood Securities. At Raymond James, I focus on the intermediate producers, some of the junior producers as well, a couple of developers. Yeah, so I mean, I've been quite a while, I guess, working as an analyst, and seen a lot of cycles. And yeah, I'm a geologist by training, so then morphed into, I guess, becoming an engineer, so a bit of a jack of all trades.
Great. So now where do you see the activity, the formation of capital? Within the country? Is it West Africa? Is it Canada? Where do you see the interest in your firm?
Well, I think it's always safe to look right here in Canada. Just the M&A we've seen across the sector over the past 4 or 5 years has really opened up the doors to a new wave of explorers and developers. We've recently seen Integra get taken out. In the past, Lakeshore, Probe, you can name them on and on. It's kind of every quarter we're seeing someone in here in Canada getting taken out. So we tend to focus on some of the explorers here and developers right in Canada, which investors are continuing to be attracted to.
So if they're getting taken out at $150 an ounce for reserves, where do you see opportunities for someone who's trading at $25? Is there a critical size that they have to have a certain grade, a certain deposit size to be taken out?
Well, yeah, it always depends on, grade is king, but I think for the majors, it's obviously size and scale of the operation that they're looking to ultimately build. So
is it 3 million ounces? Is it 1 million ounces?
3 million is probably a great number for a producer, say like El Dorado, looking at Integra, even though Integra's still, expanding that deposit there, but it's got a great history, right? So, El Dorado has a lot of data that they can go back to and lean on.
Great. Yourself?
Yeah, I think what certainly mid-tier or major companies are looking for, obviously safe jurisdiction. I think that the increased focus, so on North America, South America to a certain extent. But what I find also is what I believe is a lot of these companies are looking for assets where there is a certain stage of resource definition, if you like. So they either have a resource, have some kind of economic study, but also I think they like to look for companies with large land holdings as well, so decrease risk in terms of that project and expansion potential. So perhaps looking for assets where maybe the full value or full opportunity of that asset hasn't quite been realised as well. So I think that's what they're looking at.
Yeah, I mean, there's definitely a leaning for, an attraction for good quality assets in safe jurisdictions. I mean, I know a number of companies that I cover, Tahoe, for instance, and what they're doing with lakeshore gold assets. I mean, that was attractive for them just based on the fact that they had operation in Guatemala. They wanted to sort of, diversify the portfolio into North America. So that was interesting. But there again, I think just asset quality is key. And like B2 Gold, for instance, they're developing the Fekola asset. I mean, it's going to be an absolutely outstanding mine, but it's in Mali. So I mean, Mali, doesn't feature as far as one of the safer jurisdictions in the world from an investment perspective. But it's in a great camp. It's the same sort of trend as Rand Gold. So again, you know what I mean. I do see certain assets outside of safe jurisdictions, as long as there's good quality there, are being attractive.
Good. Where do you see countries that have great risk? I asked this question, by the way. That was the Denver group had a conference in Zurich. And where do you think it's safer, Latin America or Africa?
It kind of just depends, really. We've been on site visits all over the world, and it depends what risk really you're referring to, whether it's operational risk or security risk. So in Canada, you still have operational risk, with these sites up in the Arctic, whether it's weather, fog, just getting guys and equipment in and out of sight, and then you could have security risk even in great jurisdictions like Mexico. It's got a long history of mining down there, but it's give and take on which sort of risk you're really looking for.
Okay. And yourself?
Well, I think it's country specific within those within Latin America and Africa. I think you can identify countries within Latin America that are relatively safe compared to others, and the same with Africa, which Chris could probably talk about more in that regard. But I think I guess we're talking about sovereign risk mostly, and there are some. I think in terms of South America, we're seeing increased interest in countries like Colombia and Ecuador with Lundin Gold. So these countries are starting to open up a little bit. Argentina's probably still a jurisdiction that people tending to stay away from at the moment, but there's increased interest there with the change of government, etc. So it's certainly opening the doors, but I guess the safer jurisdictions are still North America and Canada in particular, and I think there's a balance there. I think in general, possibly in South America and Africa, which are less explored, there may be the increased potential to find higher quality assets perhaps, or like there's high quality assets still being found in North America as well, versus the jurisdictional risk of maybe having less of that prospectivity, but being in a safer jurisdiction and having an increased confidence that it's not going to get taken away from you.
Chris?
Yeah, I think, comparing sort of Latin America to West Africa, I agree with Mick. I mean, there are certain countries in West Africa that are more favourable from an investment perspective. We're looking right now at a number of companies active in the Ivory Coast. Now, the Ivory Coast has had a troubled past, but arguably it's a better jurisdiction for investment today. And it's more prospective from an exploration perspective, just because nothing much was done maybe 10 years ago. So you're seeing a lot of interest in the Ivory Coast. Burkina Faso is still probably one of the better countries to invest in West Africa at the moment, and we're seeing that by way of the Endeavour Mining are building the Houndé mine, and so again one of the more stable jurisdictions there, very proactive with regards to just stability as far as fiscal and taxation and royalties mechanisms. Latin America at the moment, I mean, Mick, you mentioned, Argentina. I mean, I cover a little company, Fortuna, that they're going to be developing the Lindura project. I mean, nothing much has been done in Argentina over the last 10 years, or maybe 5 years, I guess, and that's potentially prospective for new opportunities, new discoveries, for instance, just because of the hiatus in activity. So, it's a bit of a balance, but I do believe that asset quality is fundamental, and as long as the right framework exists for investment, these jurisdictions can be very prospective.
I asked this question, and they didn't expect that question. But when I asked, it was to Paulson's analysts, Victor Flores, who I hired out of college, who's with the Paulson, and is it Mauricio? Is the other gold analyst they have at Paulson and Company? And they're both, one's grew up in Bolivia and the other one in Mexico. And they believe that Africa is safer than Latin America, which was really, everyone was shocked by that. And they said in Africa, they only take off your fingers. In Latin America, they take arms. And we really was surprised by it because I agree with you. It's by jurisdiction, and each of them have different risks. Clearly, Bolivia is very difficult unless you've already entrenched with relationships like Ross Beatty has been successful there. Newco coming in is much more difficult. Venezuela, Ecuador realized they had to make changes, and they've embraced for Lundin Gold, so they do change. I don't know, but if you follow Colombia, that some corporations have been suing the Colombian government, like on a NAFTA, that they're in breach of their NAFTA, and it's been a big wake-up call. And the biggest part is that you're not giving us enough security against illegal workers. So now all of a sudden now the government's bending over backwards in Colombia to respond to that. And I think that's really hard in East Africa. That's my experiences. So you just can't, I think I have to agree with everything you've had to say as a group and not make one broad statement. Where do you see the biggest opportunities in metals? Is it gold? Is it copper? Is it zinc? Is it diamonds? What is it? What do you?
Well, on the copper and base metal side of things, it's kind of dependent on China and the turnaround that we can evolve out of there. And I'm not a base metal specialist, per se, but we've kind of seen a pullback in the base metals over the past couple of years. But if we get any surge in economic drive in China and Asia, I think that could be the next turn in the market here for us.
Yourself?
Well, I think I think it comes down to quality of asset to some degree. I think we look at in terms of the commodity gold. Well, difficult to read what gold's going to do on a day-to-day basis. In terms of copper, I think perhaps we're probably still a couple of years away in terms of copper making being more in demand, I guess. But I mean, regardless of the commodity, I think high quality assets, exploration discoveries that are high quality, almost regardless of the commodity in a sense, will perform well. So I think, I think with zinc. You look at zinc, and there's been with the closure of several zinc mines globally over the last couple of years, there's been calls for zinc price to rise, and for several zinc equities to rise accordingly. However, that's been kind of fragmented, I guess, perhaps. So, probably in the short term, I'd probably say gold, although however hard it is to read in that sense.
And what about silver? Lots of silver bugs here.
I'm a silver bug.
All right.
I'm glad you mentioned that, Frank. I'd say about 20% actually 30% of my coverage universe is primary silver producers. And, last year was a very, very interesting year for silver. I mean, we saw, broad-based recognition of one simple fact, and that is the scarcity value behind some of these silver stocks. I mean, if you look at primary silver producers, there's been a whittling down in the numbers of primary silver producers over the last, I'd say, 4 years. Like the Tahos of the world, Core Mining, they've all become effectively a gold producer that carries a significant silver credit. So, there's recognition for that in some of the valuations. In my coverage universe, silvers do trade at multiples higher than golds right now. And that's just due to the scarcity value of good quality primary silver producers. I'd throw a cautionary note in there, and there's got to be an understanding and a recognition that, well, about 80% of all mined silver today, is mined and as a byproduct credit of base metal mining. So we're only really dealing with 20% here that comes from primary silver production. But we are generally, we have a positive outlook for silver at the moment. And just to answer your first question there, Frank, I mean, we are pretty bullish on the prospects for gold in the near term.
Great. So can you give me a name that you crushed it, like you just knew it, and you recommended it, and it just performed, and another one that it crushed you? And what did you learn from that? Because I think a lot of people here have weathered these incredible storms, and they've lived, and they have to stomach those recommendations that go down with them. And what gives them the courage and the conviction to come back from it all? That's what makes us all special as money managers, buy or sell side, and as investors.
Yeah, I guess the winners are always easier to remember than the losers, because you try and forget those as soon as possible. But I guess the most recent one would be Nighthawk Gold, ticker NHK. I actually had the opportunity to work at one of their projects years ago in the field. And the story had just sort of slowly been evolving here over the past few years with just small drill programs in the summer up in the Northwest Territories. But more recently, they've gotten a strategic investment by Kinross of about $10 million in the fall. And on the back of that, raised about $25 million here early in 2017. So the stock's essentially gone from about 35 cents to, I think, $1.15, $1.20 last week or so. But they're sitting on a resource base, open pit, 2.1 million ounces, which was last tabled in 2012, I believe. Mm-hmm. So all the drilling since has not been incorporated into a new resource. And with the drilling expected this year, along with being well funded, they're starting to push through to that 3 million ounce mark, which we were talking about, to be more attractive to a larger producer. On the loser side,
I never say I don't believe we lose. We either win, we really, really, really win, as Trump would say, or very, very, very big wins, or we learn. So when you talk about those things that went down, you'd expect, what did you learn from it?
The ones that went down, just to be ahead, to start, you do your homework. I watched a great documentary on Warren Buffett, and he's always reading the MD&As, just understanding the operation or the geology of the exploration story, and just being ahead of the game and the curve of maybe what may or might be happening at that mine or within that company that is kind of the tipping point. And if you're kind of sitting on the fence, and sometimes it's just too late.
Mick?
I guess on the winning side, I guess two companies. I'll name two companies and describe one in more detail. But two companies, I guess, that have performed well are Marathon Gold, which is MOZ on the TSX, and Barkerville Gold Mines, which is BGM on the venture. And I think with, I guess I focus with Marathon, and Marathon's one of the, I guess I look at Marathon as one of the few undeveloped, open-pittable resources in North America. I think that's the big attraction. They've currently got 2 million ounces of underground, of mainly open pit, but some underground resource there as well. And I think the important thing from my perspective, and this is what I look for, and I think I mentioned it before, but in terms of exploration plays, which is what I predominantly focus on, I really look for companies with quality assets, of course, but also with companies that have a dominant land position as well within a good jurisdiction, both from a geological and from a sovereign perspective. And Marathon's one. They've got the strike length of they've got the 2 million ounces over 4 deposits, but most of that structural belt which those deposits are located on is mostly unexplored. So so that's been a winner for me, and they're cashed up and ready to do some serious drilling this year too. So I think I'll answer the negative, I guess particularly for me, being in the exploration side. I mean, there's more losers than winners in general. It's a high risk industry, and I think it's as long as you're cognizant of the risk, then if it's associated with technical risk, they've got anomaly and a geophysical anomaly and some geochemistry, and it doesn't hit well. I mean, that's just the nature of the game, right? It's if you don't understand or don't appreciate that risk, then maybe move on to something else, right? So that's how I'd answer that question.
Okay.
I think from my perspective, just in the context of my universe, the stocks that I cover, I mean, we're very happy with Fortuna Silver. I know I've mentioned this name before, and I've probably covered the stock for the last 7 or 8 years. So I've seen this company grow from a 2-mine company to, obviously it's going to be larger when they develop Lindoro in Argentina. But I've seen the success this one company's had at its San Jose mine in Mexico, and really that's been a culmination of good operating expertise and discovery. I mean, the Reader's Digest view here is that they made a classic discovery, close to existing development. They leveraged into that. They expanded the mill in a very prudent, cost-effective way, and they turned that asset from being maybe a 3 or maybe a 4 million ounce silver equivalent producer to over double that, all right? Internally funded as far as cash flow to achieve on that. But it's the sort of story that I like to look at, from a production perspective, is these little gems, for instance, good well-managed companies that can leverage off that sort of, discovery potential and grow their asset base without blowing their treasury. On the downside, another company that I cover, Mandalay Resources, I'm very constructive about the management team. They're some of the best in the industry. But the market's unfortunately just been waiting and waiting and waiting for an acquisition. And this is where, it's kind of tough in this space at the moment, because the market can be so impatient. And there's windows where you as long as prudent sort of acquisition decisions at the right price are executed on, the market can very, very easily sort of move away from certain stories. And I think Mandalay is suffering that right now. But no doubt in my mind that it's got a great team. But the market right now is paying a premium for companies that maybe made acquisitions maybe 2-3 years ago. B2 for Cola is a good example, that have a near-term sort of timeline to execute on that.
Great. I'm a big believer in optionality, and looking for takeovers will take place with optionality of a deposit. Where do you see, what stocks do you think that have really fantastic potential, geological footprint?
I guess one that comes to mind is Silvercrest Metals. The management team was successful with selling Santa Elena to First Majestic more recently, a couple years ago, and they had a property spin out called Las Chispas. It's a high-grade narrow vein system, I think about 30 kilometers just to the north of Santa Elena. They've had great success there, drilling it off more recently. Again, you're looking at something here, 400 or 500 grams per ton silver with some attractive gold credits of a couple grams per ton. And they're still delineating and finding new veins. So, you go from a couple as a prospect to having, double-digit 15 veins identified on the property now, with still no resource outline. So with Silvercrest still advancing, being well-funded, they're drilling this summer. We would look to see a pretty attractive resource when that is tabled here later this year.
Great.
I guess we'll probably go back to the names I said previously. I mean, I think you talk about optionality, and I think companies with large land positions have that optionality in terms of not putting all their eggs in one basket and one deposit, and if that doesn't quite live up to expectations, they've got nothing else. I think optionality in terms of your land position is very important. If I look at something like Marathon Gold again, you look at although early stage, you've got to do more studies, etc., but you look at the metallurgy there, they've got the option for flotation, carbon in leach, and also potentially heap leach as well. So there's optionality in terms of processing options there. And I think, again, going back, to one of there's not many potential open pit projects out there. So I think that's one. And you look at Barkerville, they've got, effectively got the Cisco management team involved with that there, and, access to capital. They've got 60 million in the bank. They're going to drill the hell out of that this year, 130,000 plus metres. I see Barkerville as very much a early stage version of a Cisco mining in terms of where its stage is, and I guess the people involved. So I think they're probably the two I'd highlight.
So what do you think of Ivanhoe Mines? You think it has big optionality, lots of ounces in the ground, resources?
Yeah, well, I mean, I guess with their African assets, I mean they're world-class assets. They've got the option with Friedland. I guess there's always optionality. He's got a knack of finding, and they're still expanding the resources at both those assets, right? So, there is the optionality there, but I guess I don't really, follow that stock. So,
okay. Chris?
I think, looking at optionality, when you asked that question, I automatically thought about West Africa again, and a couple of companies that I cover, developing assets there. One would be B2 Gold, that are developing its Tuga satellite project, which is very close to its Kiaka development stage project. Then you look at Orezone at Bombore, and then you look at what West African Gold is doing, at its projects. And, you look at these three projects, and, arguably the three of them are going to battle as standalone projects to be developed. But I'd say there's potential for M&A optionality here, just for the simple reason that together, each of these projects can provide something that, as a component, would make a very, very interesting sort of development opportunity there. Another company looking at optionality, one of the few developers that I cover is Victoria Gold in the Yukon at the moment, and they've got a fully permitted project, feasibility out, camp ready, effectively shovel ready. They're just looking for funding at the moment. But you're looking at 200,000 ounces a year production profile. First quarter, lowest quarter operating costs again, and in the context of the coverage that I look at, there's not many acquisition opportunities out there for the mid tiers. So I think that's and they're well cashed up. I mean, they can ride this out. They can continue to develop. They continue to sort of unlock some of the exploration upside offered by the project. But M&A.
M&A. So what's the hottest area in the country that you think in Canada right now?
The area in Canada?
Yeah. Is it Yukon, Northwest Territories, Quebec?
I still think just the Kirkland-Timmins area is still underexplored. No matter if they've been mining through there for 100 years, there's still discoveries to be made.
And you like the Maple Leafs too. I'm teasing you.
That's all right.
I'd have to concur. I think Quebec, in Canada at least, and I guess you highlight that with Cisco Mining's Windfall deposit now. The Quebec region is mostly associated with these high grade vein-hosted systems, and you look at Windfall, and it's more, I guess, an intrusion-related system. So, that's something that hasn't really been thought of before, I guess, in Quebec. And the amount of discoveries that are still being made there, the quality of assets and production there, I still think Quebec for me.
Chris?
I'd agree. I think the Timmins camp, for instance, very, very, very good opportunities. A safe jurisdiction. I look at what Tahoe is doing there with the lakeshore assets. I think that's by far in Canada or North America, the hotspot at the moment.
Nothing in British Columbia?
You asked me which was my
British
favourite.
Columbia.
No, I think, certainly British Columbia is
the
much
hottest
more
area in British Columbia?
favourable than what it was a few years ago. I guess with Pretium coming on board and Barkerville's in there now, there's a lot more exploration work or activity in that part of the world. I think it's really opening up over the last couple of years for sure.
Great. Hottest area in British Columbia?
I'm the Toronto guy.
Chris?
I got to defer to Mick on that one. I'm a West African guy.
Well, there you have it. You have global investors, and we use these analysts. Ralph Aldis is our portfolio manager, top gun. He relies on them for their insight and granularity. They're road warriors, and so you've all had first chance, opportunity to meet them and hear their stories for your investing. And let's all go and enjoy the presentations later today. I hope you've thought, and the same thing with the companies you saw earlier. U.S. Global has significant investments in those particular companies, and we have a lot of trust and confidence in these three amigos up here.
Thanks, Frank.
Thanks, Frank.
Thank you.
Thank you.